Yes, in the name of Allah the Merciful, peace be upon him. I greet you in the Arabic words, Assalamu alaikum. So consider this volume 2 of our discussion in terms of Sharia banking, also known as Islamic banking. We're going to go through some advantages over traditional banking, which operates basically on conventional financial principles, as opposed to Sharia way of banking, which operates on Islamic principles. And some of the key advantages in terms of Sharia banking would include the following. Number one, what they call ethical and moral compliance. So Sharia banking strictly adheres to Islamic ethical and moral principles. It avoids investments in businesses involved in activities considered as haram or forbidden in Islam, such as alcohol, gambling, pork, and interest-based financial transactions. So this appeals to individuals who want their financial activities to align with their religious values. Number two, no interest, what they call riba transactions. So one of the fundamental differences is that Sharia banking does not involve interest-based transactions. Charging or paying interest in terms of riba is forbidden or prohibited in Islamic finance. So instead, profits and loss sharing or risk sharing and asset-backed financing are primary mechanisms which lead to fair and equitable distribution of risk and profit. Number three is risk sharing. In Sharia banking, the bank and the customer often share the risk and rewards of financial transactions. So the risk sharing approach can create a sense of partnership and responsibility as opposed to fixed interest rates in conventional banking. And then another advantage is transparency. Under Sharia compliant transactions must be transparent, and underlying assets and the contracts are thoroughly examined by Sharia scholars, and this transparency can foster trust between the bank and its customers. Another advantage is what they call wealth creation. Islamic finance promotes equitable wealth distribution and social justice. So the avoidance of exploitative practices can actually help in reducing income inequality and ensuring that financial resources are fairly distributed among various segments of society. And then there's what you call asset-backed financing. Most Sharia-compliant financing is based on what they call real assets and tangible services, which reduces the likelihood of what they call speculative bubbles and encourages responsible investment. And then there's what you call charitable giving, what they call zakat. Many Islamic banks offer services to help customers calculate and distribute their zakat contribution, which is a form of alms giving required to financially able Muslims. So this encourages charitable giving and even social responsibility. Another is what they call asset preservation. Sharia banking aims to protect the assets and wealth of its clients through what they call ethical investment in terms of practices and making it less susceptible to economic downturns and even market crashes. Another advantage is what they call Islamic microfinance. Now, Islamic microfinance will provide access to small loans and financial services to individuals and even small businesses in a manner that adheres to Sharia principles, helping marginalized and unserved communities, not so that they can be able to have a fair share. There's also what you call customized share complaint products in terms of Islamic banking, often offers a variety of what they call Sharia compliant products tailored to specific needs and preferences in terms of their customers, including home financing, saving accounts, and investment opportunities. So it's important, my friends, to note that some of these advantages as far as Sharia banking is concerned should be viewed through the lens of Islamic ethics and principles. In other words, individuals and businesses who prioritize these values often find Sharia banking to be more suitable and more appealing alternative to traditional banking. However, it's also essential to consider the potential limitations and challenges that are associated with Sharia banking, such as the need of a qualified Sharia scholar, or even in terms of ensuring compliance and potential limitations in terms of product diversity. I'm going to give you some more examples that Sharia banking may have over traditional banking. Yeah, But as I said, many of the things are discussed in my book, Sharia Law and Islamic Banking in Uganda. We have what they call asset-backed financing. Sharia compliant traditions are often based on tangible assets or services, which means that they are what they call is an underlying asset banking, the financial in terms of financial arrangement. So this can reduce speculative nature of the financial transaction. And then there's what they call reduced systematic risk. So Islamic finance banking generally involves risk sharing and asset-backed transactions, and it can help reduce risk, what they call systematic risk, in the financial sector. So it is less prone to financial crisis or even bubbles, as you like. Then it also enjoys what they call ethical investment screening. Islamic banks typically conduct ethical investment screening to ensure that the businesses they invest in or provide financials are in compliance with Islamic principles. So this basically leads to a more responsible and even sustainable investment. There's what they call financial inclusion. Islamic banking can actually provide financial inclusion by offering what they call Sharia compliant financial services to a broader segment of the population, including those who may be excluded from the traditional banking system. Not so. And also Sharia banking or Islamic banking for that purpose focuses on what they call real economic activity. So Islamic finance encourages investment in real economic activities as opposed to speculative financial instruments. So this can lead to more productive or even job-creating investment. And then another advantage is what they call partnership approach. So Islamic financing also often involves partnership structures such as the Mudaraba and the Musharaka, which promote cooperation as shared responsibility among parties in terms of fostering a sense of partnership in economic activities. Now, another advantage also is what they call community development. Now, Islamic banks are encouraged to contribute to the social and economic development of their communities, which can lead to investment in terms of infrastructure, education, healthcare, and other social areas. I know this also happens in traditional conventional banks, but this is something perhaps eminently strong in this finance of Sharia banking. Now, resiliency also in terms of economic shocks is another advantage. The asset-backed nature of the many Islamic financial transactions can actually provide resiliency in terms of economic shocks or even downturns, as actual assets underpin their financing. And also another advantage is what they call alignment with sustainable development goals, what they call SDGs. So Sharia banking is often seen as aligning very well with United Sustainable Development Goals, particularly in areas like poverty reduction, access to education, healthcare, and even economic growth. Another advantage is what they call customization and flexibility. So Islamic banks often provide a very wide range of Sharia compliant financial products, allowing customers to choose options that align with their values and even meet their specific financial needs. So as I said, these advantages make Sharia banking an appealing choice for individuals and businesses who want to ensure that their financial activities are within the line of their ethical and religious beliefs, while also seeking responsible and sustainable financial solutions. I will still mention some of the advantages for purposes of emphasis so that we know why are we now emphasizing, or why are people talking about Sharia banking over traditional banking. And I'm not saying that there's a problem per se with traditional banking, but this is a novel area which we need to comprehend. There is no late payment penalties. In Sharia compliant financing often does not involve late payment penalties, making it more lenient for customers in terms of facing financial difficulties. And also in terms of risk mitigation, for example, in Islamic finance, it encourages risk sharing and risk mitigation strategies, reducing the chances of excessive leverage and risky financial behavior. And then also, they also tend to focus on community, in the sense that Islamic banks often prioritize community-focused projects and initiatives, contributing to the betterment of society and even local communities. Another advantage would be in terms of long-term stability. The principles of Islamic finance usually promote what they call long-term stability by discouraging speculative and short-term profit-seeking activities. Another advantage would be in terms of what they call reduced speculation. Sharia banking discourages what they call speculative trading in financial markets, helping to reduce what they call market volatility and instability. Also, by way of emphasis, it also helps in terms of compliance with Sharia principles, as I say, for individuals, in terms of different individuals and businesses that prioritize adherence to Islamic law. So Sharia banking ensures their financial activities are in accordance with their own faith, not so. And then another aspect, what they call customer-centric approach, in the sense that Islamic banks tend to offer personalized services and are often more customer-centric, and they aim to meet specific financial needs of individuals and businesses while adhering to Sharia principles, not so. And then another advantage would be in terms of compliance with Sharia inheritance law. Yeah. So under this, we have to understand that Sharia compliant banking ensures that financial arrangements are in accordance with Islamic inheritance law, which can be particularly important for estate planning. Yeah. That as a strong point there as well. And also what they call environmental responsibility. Islamic finance principles usually encourage environmentally responsible investment and financing, aligning with growing interest in sustainable and socially responsible investment. Okay, and then also another advantage would be in terms of what they call global relevancy. Sharia banking is not limited to Muslims majority countries. It is also relevant and accessible to Muslims and non-Muslims worldwide who seek ethical and financial alternatives. Yeah, so that's another strong point that we may have to comprehend, especially when it comes to the nexus between the two different sections. Okay, so these advantages make Sharia banking viable, appealing as an option to individuals in terms of businesses that prioritize, as I said, ethical and responsible financial practices while seeking a range of financial services that cater for their specific needs. Okay, I'm going to talk about some other aspects in terms of more important advantages as well. As I said, advantages of Sharia banking over traditional banking, so that you may comprehend and have the grasp of what we're talking about. As I said, you can seek for more in my book, Sharia Law and Islamic Banking in Uganda. It has what they call customer loyalty. Customers who align with these ethical principles may be more loyal to Islamic banks due to their shared values and ethical considerations. It helps in innovation and even product development. Islamic banks are incentivized to develop and innovative financial products that adhere to Sharia principles, fostering competition and even product diversity in the financial sector. And then also as another advantage in terms of global financial inclusion, what happens here is that Islamic finance has the potential to enhance global financial inclusion by offering ethical and accessible financial services to Muslim populations and even non-Muslims alike. Also, as another advantage, what they call crisis resiliency. The risk sharing and asset-backed nature of the Islamic finances can actually contribute to a bank's resiliency during economic crises, and it avoids excessive leverage and speculative activities. Another advantage would be in terms of support for small and medium enterprises, what they call SMEs. So Sharia compliant financing options are often used to support SMEs, which play a crucial role in economic development and even employment generation. Not so. Another advantage also would be in terms of wealth preservation and succession planning. So Islamic banks often offer solutions for wealth preservation and inheritance planning that adhere to Sharia laws, ensuring the smooth transfer of wealth to heirs. Another important advantage would be in terms of collaboration with ethical investors. So Islamic banks may actually collaborate with ethical and even socially responsible investors who share similar values in terms of contributing to a broader movement of ethical finance. Another strong advantage as well is in terms of social responsibility. These Islamic banks often have a strong sense of social responsibility and may allocate a portion of their profits to charitable and even social projects. And then another strong one also would be in respect to corporate governance. Islamic banks often emphasize good corporate governance practices, contributing to transparency, accountability, and responsible business conduct. Also, by way of an advantage, it helps in terms of growing international presence. Sharia banking has grown beyond traditional markets, with Islamic institutions operating globally and offering access to ethical financial services in various religions or regions for that purpose. So that's extremely important for us to understand that those are some of the strengths that if you have to make a comparativeness in terms of talk about the pros and cons as opposed to traditional banking systems, then those come into mind. Because of the importance of the subject and because of the fact that many of our people need to know, we could give some other advantages so they can understand. There is also, as I said, what we call reduced speculative bubbles. Islamic finance principles discourage speculative behavior, which can help in reducing the formation of asset bubbles and even excessive market volatility. So that's another important one. And there's also an advantage in terms of what they call increased economic stability. So by discouraging what they call excessive debt and speculative trading, Islamic finance contributes to economic stability and reduces the risk of financial crises, if you like. Another one is a very strong promoter of what they call ethical behavior. Now, the ethical and moral guidelines of Islamic finance promote ethical behavior in financial transactions and even business dealings. So that's something that also comes of mind. And also, as an advantage, is what we call innovative risk management. Islamic finance encourages innovative risk management as a technique and are often, asset-based and participatory, leading to more robust risk management practices. As I said, crisis resiliency, the principles of risk sharing and asset-backed financing in Islamic finance can actually contribute to resilience in terms of financial institutions during economic downturns or even different crises, as it were. And then the fact that it aligns itself with sustainable development is even another aspect that we need to comprehend, and aligns itself with the principles of sustainability and social responsibility. So as I argue these points, I'd like to just take you through some of the things that I'm talking about in the book Sharia Law and Islamic Banking in Uganda. I'm trying to read it from my laptop here so that you can comprehend some of the things that are important. The most important thing probably that comes to mind that you need to comprehend would be things to do with Islamic banking in Uganda. Obviously, the definition of Islamic banking, the terms that are used, the philosophy, the modern day, and then the development of Islamic banking in Uganda, and then aspects to do with the Islamic ecosystems, and then the control of incentives for accumulation of wealth, global trends in Islamic banking, and what is Islamic financing, the major four principles of Islamic banking, which we talked about in volume 1, and then Islamic banking, how it operates in Uganda, the regulatory framework in terms of Islamic banking, things to do with where we are today in terms of those core principles, and then the issues to do with halal, what they call the halal product concept, and then the halal standards as well, and then aspects to do with the halal market, and then in terms of the regulating the ijra mortgages issued under Islamic banking, aspects to do with ijra, how to lease, to own, for example, and then the validity of the ijra, and then applications of ijra in Islamic banking and finance, aspects to do with structures of the murabaha and the elements of the murabaha contracts, what we mean by that, consideration in terms of the definitions, and then duties of the mortgagors and the mortgagee in that respect, aspects to do with the matrimonial property perhaps, aspects to do with security in terms of mortgages as well, and then aspects to do with forms of tacking, suits in terms of that aspect, covenants in terms of that aspect, and then powers of court in terms of mortgages, and then how in terms of honesty dealings for the believers, creation of harmony in terms of Islamic faith, and then aspects to do with the principles and ethics of social justice and fairness, and then aspects to do with the principles in terms of Islamic banking, the aspect of riba, which I talked about in our introduction there, how riba is related to consumption in terms of loans and how it applies to commercial loans as well, aspects to do with the abolition of interest-based transactions as well, aspects to do with conventional banking in terms of the differences which I just mentioned, and then aspects to do with modes of financing under Islamic banking, in terms of the mudaraba, in terms of profit sharing, and then types of the mudaraba, and then musharaka as well, the rules in terms of distribution, aspects to do with the murabaha as well, and then issues that rules for a valid murabaha in terms of the transaction, and then aspects to do with biomujal, aspects to do with what they call musawala, or what they call musawala in terms of pronunciation could be musawmah, and then ijra, as I told, the silent features of ijra in terms of the transactions that are involved, aspects to do with the isna and salam, and then sukuk, all those aspects. So we talked about majorly all these aspects that are important in terms of understanding So when you look, I'm just referring through the book for you, so you know exactly what we're talking about. That when you bless yourself with this book, you will have blessed yourself in one way, so you comprehend what Islamic banking would entail in its entirety, and then aspects to do with Islamic, Sharia in terms of stability of the banking system, regulatory framework, removal of members of the Sharia, for example, advisory board, aspects to do with the Sharia Advisory Council, aspects to do with the qualifications of scholars. I've mentioned already mortgages, foreclosure perhaps in terms of lending, creation of mortgages, aspects to do with receivership, securities, and then aspects to do with the whole debt payables, and then aspects to do with the mortgages again under IJRA, how the law regulates them, termination and consequence of lease arrangement, for example, the rights of subleasing under murabaha, and then aspects to do with musharaka as well. All these things we've talked about, the applicability of Islamic banking perhaps in Uganda today as we speak now, international instruments that regulate Islamic banking, and then the financial sector in terms of Islamic banking, then what they call Islamic widow in terms of, and then alternatives to foreign borrowing as well. And then issues to do with the recommendations that are proposed for the development of Islamic banking in Uganda. So when you read our book, you definitely have a deep comprehension of what we're talking about in terms of that. And one of the things that we explore, as I said, is we also talk strongly about the provisions of the Quran, and also make references to the Bible in terms of what the law would say, specifically the Holy Bible, where we talk about the book of Deuteronomy, the book of Ezekiel, the book of Matthew, which comply with certain aspects that have to do with Islamic teachings in terms of interest and usury, where they are specifically forbidden. Obviously, I made a lot of emphasis in my introduction when I made certain invocations in terms of the provisions of the law, but more importantly in terms of Holy Scripture, in terms of the Quran and the Hadith that talk about those components. So we need to understand that this is intended for us, and this definitely will help us have a very deep understanding of the law, or in terms of banking, or Sharia banking, or Islamic banking in Uganda. And this book, by the way, as I said, is dedicated to Allah, the most beneficent, the most merciful, to whom all praise and honor is due. The Lord, or the Lord of the Alamin, mankind, in terms of genius and all that exists, the most beneficent, the most merciful, the Holy One, or of the day of recompense, in other the day of resurrection. Him alone is Lord, regardless of whether or not you're Muslim or Christian or whatever faith. The idea is to invoke the fact that there is but one God. And the argument is that we here in my dedication, I call him Al-Hakim, the wise one, or Al-Hakim, the judge. Indeed, he is the all-knowing in terms of when you look at the Quran, Surah 2:32, the mighty one, the wise one. You look at the Quran, Surah 2, 129, the wise one, and the person who all knows all things. And the Quran again, Surah 6:18, is the everlasting, all-embracing, all-wise, Surah 4, 130. So he's a judge to whom all due and honor is worth. So these are things that we talked about in our book, just for purposes of trying to comprehend and make you understand that this is important. In terms of other things that may come to mind, as I said, the Islamic banking deeply aligns, as I said, with the Islamic values in terms of individuals who engage in businesses. So it helps them to prioritize the adherence of Islamic values and principles. So there's no doubt that Sharia banking ensures that all their financial activities are within this line of faith, in terms of the community, in terms of their belief, in terms of what they're supposed to do. And it helps, as I said, in terms of a lot of projects, community projects, schools, for example, welfare facilities, social programs. All those we will look at as contributions of what Sharia banking can actually do, and how attractive it can be in terms of giving us that general and important aspect of life. And this is not to say that the conventional banks don't do that, but it's just an emphasis that for them, because they have that basis of of what? Religious backing, direct religious backing. It helps them to move in that direction. So Islamic banking, which, as I said, also known as Sharia compliant banking, is definitely guided by a set of principles and features that definitely distinguish it from conventional interest-based banking. And the most fundamental features in Islamic banking would be the following, for purposes of emphasis, so that we know that we are aligning in terms of what makes it advantageous. But in terms of, number one, prohibition of riba, interest, the most distinctive feature in Islamic banking is the prohibition of riba, usury or interest, in terms of all forms of interest-based transactions that are strictly forbidden in Islamic financing. Instead, Islamic banks operate on the principles of profit and loss sharing, in terms of risk sharing, and also in terms of asset-backed financing. And then the aspect of what we call Sharia compliance. Here we are making an argument that Islamic banks operate in accordance with Sharia law. I've said that on and on, which governs all aspects of life, including finance. Sharia compliance ensures that all financial transactions and investments adhere to Islamic ethical and moral principles. Not so. And then a strong advantage in aspect to asset-backed financing, as I said. Islamic financing is typically asset-backed, meaning that every financial transaction must be linked to a tangible asset or service. So this ensures transparency and helps to reduce what they call speculative activities. And then another strong point is risk and profit sharing. Islamic banking, the risks and profits of financial transactions are shared between the bank and the customer, and therefore this encourages a sense of partnership and responsibility in financial dealings. And then another strong point is in terms of non-uncertainty, what they call gara, or gambling, what they call misr. In terms of what that means is that Islamic finance prohibits transactions that involve excessive uncertainty, what they call gara, or gambling, what they call misr. So all financial arrangements must be transparent and must be free from gambling, in terms of those particular elements. And then ethical investment screening, which becomes extremely important. Islamic banks conduct what they call ethical investment screening to ensure that their investment and financing are free from involvement in business deemed haram or forbidden, such as alcohol, such as gambling, such as pork, and any other prohibited activity. And then the aspect of zakat and charity. Remember that Islamic banks offer services to help customers to calculate and distribute their zakat, what they call alms giving, in terms of contributions. So additionally, many Islamic banks allocate a portion of their profits to charitable and even social causes. We see that also now happening in traditional banks. I don't know whether they're copying from this side or they're trying to be fair, but that is something, again, that is very strongly embedded within Islamic banking. And then the aspect of personal and business ethics. Islamic bank promotes ethical conduct in terms of personal and business transactions, in terms of fair dealing, in terms of honesty, in terms of transparency, and avoidance of exploitation that are highly encouraged. Also, that's important. Also, prohibition of excessive speculation. Speculative activities and excessive leverage are actually discouraged in Islamic finance, and this can contribute to economic stability by avoiding speculative bubbles. And then there's what we call community and social responsibility. Islamic banks often prioritize community development and investment in social responsibility projects such as infrastructure, education, healthcare, and even poverty alleviation. Okay, and then a beautiful one here that they call no late payment penalties. Not so. How many times do you see banks jumping on people's heads, traditional banks, conventional banks? Man, you see them coming in a very, very serious way. But under Sharia banking, Islamic finance banking for that purpose often does not involve late payment penalties, as they are considered a form of riba in terms of an interest. And then there's aspect what they call customized Sharia compliant products. As I said, I just mentioned that in the book. Islamic banks offer a wide range of Sharia compliant financial products tailored for the specific needs and preference of their customers, including home financing, saving accounts, and even investment opportunities. So these features of Islamic banking are fundamental, ladies and gentlemen. They are fundamental in terms of creating a system that reflects in terms of good ethics, in terms of risk sharing, in terms of community-oriented nature, and they are designed to ensure that financial transactions are conducted in a manner that aligns with Islamic values, ethics, and even promoting fairness in terms of transparency and social responsibility. That's extremely important. I'm making a super emphasis in terms of this. I would like to give a few more features in terms of the characteristics of Islamic banking so that you guys get to know exactly what we're talking about. This is a novel area for our country. This is an area that many people are shy to talk about, but we thank God who gave us the ability to do that. What's called legal representation, for example, or documentation. In Islamic banking, all financial transactions require clear and transparent legal documentation outlining the terms, the conditions of the agreement. Now, this documentation is essential in terms of what they call enforcing terms and ensuring compliance with the Sharia principles. And then there's a strong one which they call the Sharia supervisionary body. Islamic banks typically have a Sharia supervisionary body or Sharia scholars who actually provide guidance and oversight in terms of ensuring that the bank's operations and financial products comply with Islamic law. So it ensures an ongoing Sharia compliance. I just mentioned that in the book in passing, if you remember. We have a whole chapter dedicated on that. And then the aspect of shared profit and loss. Islamic finance often involves profit and loss sharing in terms as a mechanism where both banks and the customer share in the outcomes of an investment. So this promotes a sense of shared responsibility and partnership in financial arrangements. And then another strong point is that has to do with real economic activity. What happens is that Islamic banking encourages investment in real economic activities such as businesses, trade and infrastructure development. Speculative and purely financial activities are totally discouraged because I know it's more looked at as a gambling of sorts. Okay, and then there's an aspect that has to do with avoidance of what they call over leveraging. Yeah, what they mean here is that Islamic finance discourages excessive leverage, which can contribute to financial instability. So by emphasizing asset-backed financing, it reduces the risk of over leveraging. And then an aspect, again, as an advantage, what they call clear ownership and title. In Islamic banking or financing for that purpose, the ownership and title of an asset must be clear and unambiguous. So this ensures that the financing arrangement is based on actual assets and not on a financial instrument. So that's another aspect. And then I'll super emphasize the fact that no interest rate risk. Yeah, no interest rate risk in the sense that in Islamic finance, doesn't involve interest. Customers are not exposed to interest rate risk. They can provide a degree of stability, especially in a changing interest rate environment. Not so. And then there's what we call equity financing. Islamic banks often use what they call equity-based financing methods, such as the Mudaraba, as I told you, or the Musharaka, which involves shared ownership in a venture. This aligns the interest of the bank and the customer. Not so. So there's kind of Ubuntu Gulam of sorts. Those of you who haven't read our book, Ubuntu Gulam and the Law. And then it helps in terms of support for small and medium enterprises. Islamic banks frequently provide financing options tailored for the need of SMEs, okay, in contributing to what they call economic growth and job creation. I'll super emphasize the aspect of transparency and disclosure. Transparency and full disclosure of terms and conditions are an integral part of Islamic banking. Customers must fully be informed about the details of their financial transaction, which may be dicey on the other side of the ocean, if you like. And then the aspect of reduction in terms of income inequality through wealth distribution mechanism, ethical investment, and social support. Islamic banking aims to reduce income inequality and even promote social justice. So, ladies and gentlemen, most of the things I'm talking about are super important, and they will help us to comprehend and understand why our country has actually chosen, or why perhaps we need to emphasize the aspect of Islamic banking or Sharia banking for that purpose. Because, as I said, the advantages are quite enormous. The advantages are quite enormous. Now, in terms of more features, in terms of what would reign as a characteristic in terms of banking, please talk about contractual flexibility. Islamic banking is characterized by a high degree of what they call contractual flexibility, allowing for a wide range of financial arrangements and structures, and even to accommodate the diverse needs of customers and businesses. Not so. So that's another aspect. When we talk about risk mitigation, for example, Islamic finance promotes what they call risk sharing and risk mitigation strategies, which can actually contribute to the overall stability of the financial system in terms of reduction in terms of risks for financial crises, if you like. And again, the icing of the cake, which comes in terms of the asset-backed financing, as I said. Islamic banks typically engage in asset-backed financing, where the financing is tied to specific assets. This provides security and transparency in financial transaction. And then the aspect which is again super good is the moral and ethical guidelines. You know, businesses must have ethical and moral guidelines. Without that, we're in trouble. So Islamic banking adheres to moral and ethical guidelines that extend beyond just financial transactions. These guidelines cover what they call personal conduct, business ethics, and even social responsibility. Yeah. And then someone could also argue it in the line of what they call personalized services. Now, Islamic banking also often offers what they call personalized and even tailored financial services to meet the specific needs and the values of their customers. This can lead to what they call a high level of customer satisfaction. And then another strong point is what they call local economic impact. Islamic banks frequently prioritize investment in terms of local communities and businesses, stimulating local economic development and creating or leading to the creation of job opportunities. Another strong point that is important as well is wealth preservation and succession planning. Islamic banks usually also offer solutions for wealth preservation and succession planning and adhere to what they call Sharia laws, not so, ensuring the smooth transfer of wealth to their heirs. And the also strong point is the interconnectedness in terms of global Muslim community. Islamic banking also fosters a sense of community and interconnectedness among Muslims in terms of worldwide, and it offers them what they call financial services that align with their shared religious values. As I said, still it also cuts across in the sense that it also gives an opportunity for non-Muslims. And then don't forget the charitable giving. In this sense, what they call the sadaqah, okay, SADAQAH. In addition to the zakat, obviously, Islamic banks may support charitable giving, sadaqah, and you know, social initiatives that benefit those in need. Yeah. And then another strong point is in terms of reduction of the systematic risk. The risk-sharing nature of Islamic finance can actually contribute to a reduction of what they call systematic risk. So the entire financial system is not solely reliant on a single interest rate or even on rate on return. Yeah. And then super important as well is the fact that it also helps in terms of support for sustainable development goals. Islamic finance principles often align with United Nations Sustainable Development Goals, particularly in areas like poverty reduction, access to education, healthcare, and even economic growth. So, as I said, my friends, these features definitely and without any shadow of doubt highlight the comprehensive approach of Islamic banking, which aims to create, as I said, a financial system that is not only Sharia compliant, but also ethically responsible and supportive of sustainable economic and social development, right? So even as we engage in this new, novel, yet important area, we have some countries, as I said, that are already engaging in it, even in Africa. And Uganda, we're lucky that we also started it. Some banks have started practicing it. So it's only fair that we comprehend and understand. There's also an advantage in terms of what they call equity-based contracts. Islamic funds often relies on what they call equity-based contracts, such as I told you, the madaraba and what they call the profit sharing, and then the musharaka, what they call partnership. So these contracts promote fairness, and profits and losses are shared among those parties involved. So, I mean, I could go on and on and on and explain all these different aspects, but for purposes of giving you the liberty and the opportunity to read our book, it's important for you to go to lubogo.org, suigeneris.com, and find out about this book. My friends, listen, my name once again is Isaac Christopher Lubogo, and I've just been talking about Islamic banking. God bless you. That is volume 2. Please take liberty of listening to both our volumes. Thank you for your attention.